Welcome to Books in Minutes, where we break down big ideas into understandable concepts. Today, we're going to take a deep dive into something that impacts every single person on the planet: money. How it came to be, how it flows, how it's created, and most importantly, how you can make it work for you. So sit back, grab a notebook if you like, and let's explore the fascinating world of money. Money, as we know it today, didn't always exist. Long ago, humans relied on a barter system. If you had grain and needed cloth, you'd find someone who had cloth and wanted grain. This system worked for small communities, but was inefficient. It was hard to agree on relative value, store wealth, or carry out large transactions. To solve this, societies turned to commodity money, items with intrinsic value that everyone recognized. Gold, silver, shells, salt, and even cattle were used. Gold became particularly important because it was durable, portable, divisible, and universally desired. But it wasn't perfect. Carrying heavy gold bars or dividing them for smaller transactions was cumbersome. Around 600 BC, the first coins appeared in Lydia, modern Turkey. Coins standardized trade and made transactions simpler. Later, paper money emerged in China during the Tang and Song dynasties. Governments guaranteed the value of this paper money, and people trusted it more than barter or commodity exchanges. In the modern world, most money is fiat currency, money that has no intrinsic value but is backed by government authority. Our dollars, euros, rupees, and yen are examples. Increasingly, digital currencies like cryptocurrencies are reshaping our understanding of money, making it global, fast, and decentralized. At its core, money serves four primary functions. Medium of exchange. Money makes trading simpler. Instead of bartering goods, you can pay a set value for products or services. Store of value. Money preserves purchasing power over time, allowing you to save. However, inflation can erode this power. Unit of account. Money provides a common measure for valuing goods, services, and assets. Standard of deferred payment. Money allows us to pay or borrow in the future with agreed value. Money comes in physical and digital forms. Physical money includes coins and banknotes, while digital money exists as balances in bank accounts, mobile wallets, or online payment systems. Cryptocurrencies are a new form of digital money, decentralized and powered by blockchain technology. Our relationship with money is psychological as well as practical. How we perceive money influences spending, saving, and investment decisions. Inflation, debt, credit, and wealth all affect human behavior, and understanding this psychology is key to financial success. Most people think money is printed, but the reality is more complex. Central banks like the Federal Reserve in the USA or the Reserve Bank of India control money supply. They regulate inflation, set interest rates, and ensure economic stability. Banks operate on a system called fractional reserve banking. If you deposit $100 in a bank, it doesn't just sit in a vault. The bank can lend most of it, say $90, to someone else. That $90 gets spent, deposited in another bank, and part of it is lent again. This process multiplies the money in circulation, allowing economies to grow. Governments can also increase money supply through policies like quantitative easing, injecting new money to stimulate economic activity. Loans, mortgages, and credit cards further expand the flow of money in society. Essentially, money isn't just physical. It's created through trust, debt, and banking mechanisms. Money is never static. It flows constantly. At the simplest level, households earn income from businesses, pay taxes to the government, spend on goods and services, and save in banks. Businesses use money to pay employees, invest, and expand. Banks lend and facilitate transactions. Governments spend and regulate, while international trade brings money in and out of countries. Inflation and deflation illustrate money's movement and value. Inflation occurs when prices rise, making money less valuable. Deflation is the opposite. Prices fall and money gains value. Both affect savings, spending, and investments. Globally, money moves through forex markets where currencies are exchanged. Exchange rates fluctuate based on supply, demand, political stability, and economic growth. This global circulation of money connects nations, economies, and individuals in ways that were unimaginable centuries ago. For individuals, understanding money is critical. Budgeting is the foundation. Tracking income and spending ensures financial stability. One popular rule is the 50-30-20 rule. 50% for needs, 30% for wants, 20% for savings or debt repayment. Investing is another key concept. Money invested grows over time through compounding, famously described as money makes money. Stocks, bonds, real estate, and mutual funds are common investment vehicles. Understanding risk versus reward helps in making smart decisions. Debt can work for you or against you. Good debt, like a mortgage or student loan, can build wealth over time. Bad debt, like high-interest credit card debt, erodes it. Managing credit and understanding interest rates are crucial for financial health. Finally, cultivating a wealth mindset is essential. Money should be viewed as a tool, not a goal. Understanding taxes, insurance, retirement planning, and passive income streams ensures money works for you instead of the other way around. Businesses use money to grow, innovate, and generate profits. Revenue comes from selling goods or services. Profit is the money left after costs, which can be reinvested to expand the business. Companies can fund growth through bootstrapping, personal savings, or external funding like venture capital. Public companies raise money through IPOs, selling shares to investors. Managing cash flow is crucial. Operating cash flow keeps day-to-day operations running, while free cash flow can be used for expansion or dividends. Businesses not only generate wealth for themselves, but also stimulate the broader economy by creating jobs, producing goods, and driving technological innovation. Money in the global economy is influenced by monetary and fiscal policies. Central banks control money supply, while governments decide on spending and taxation. Policies can stimulate growth or curb inflation. The global banking system enables countries to trade, borrow, and invest. Organizations like the IMF and World Bank manage international financial stability. Financial crises like the 2008 recession or the Great Depression illustrate what happens when money systems fail, teaching valuable lessons about regulation, risk, and trust. The future of money is increasingly digital. Cryptocurrencies, blockchain, and decentralized finance are transforming how money flows, who controls it, and how fast it moves across borders. To make money work for you, start with financial independence. Spend less than you earn, save diligently, and invest wisely. Avoid lifestyle inflation and diversify your income streams. Use money as a tool for growth, not a source of stress. Build a mindset focused on creating value, long-term planning, and smart financial choices. And that's a complete journey through money, its history, creation, flow, and role in individual and global finance. Money is not just currency. It's a system, a tool, and a mindset. Use it wisely, invest smartly, and let it work for you. If you enjoyed this deep dive, make sure to like, subscribe, and hit the bell icon for more in-depth explorations of books and ideas. Thanks for watching Books in Minutes, and I'll see you in the next video.